We're going to jump right into the charts today. We've been talking about the Fed meeting last week, and I think everybody is pretty up to speed on the Fed raising interest rates and Powell saying that they've reached neutral. A lot of people confused by that comment, but that's what the market interpreted as a Fed pivot. In other words, and some investors interpreted Powell's comments in terms of the Fed not doing anything else right now and kind of holding steady, which in their interpretation was a pivot. But then Neil Kashkari came out and said the Fed is committed to fighting inflation. They're going to do whatever it takes, meaning they're going to continue to raise interest rates. They are not pivoting. So this relief rally, I found some pretty interesting things in the charts in terms of the traditional market relief rallies. And as we know, Bitcoin and crypto are tied to the traditional markets because they are risk assets. This is Bitcoin in the hourly here. And I noticed something in the markets. Let's check in on a couple of things with Bitcoin real quick. As we know, Bitcoin has been fighting to reclaim the 200 weekly moving average, and it did close above it yesterday, fighting to hold it right now. So will it hold the 200 week moving average as we close out this week and go into this week? And then we have this death cross coming that we looked at in terms of that. When that cross happens, the previous area indicated and was the bottom in the past when these moving averages cross. So is it going to happen this time? Will this be the bottom? Is this area going to be the bottom, or are we going to see some more downside? Well, let's take a look at something in traditional markets here real quick, just to kind of see where we're at. So the market's been rolling over ever since this peak in November, December, January timeframe. And let's take this last pivot high and we'll look at that. So one thing we want to see this bounce here. So this bounce in the Dow has been 10%, NASDAQ, this bounce that we're in right now, this bear market rally, 18% for NASDAQ. And on the S&P, about 13% on the S&P. So let's go back and take a look at previous bear markets. And we're not going to look at March 2020 because that was kind of an anomaly. We're going to look at the two real bear markets prior to that. First was 2009. Well, not the first, but the most recent was the big drop in 2009. And as you can see, this top is kind of rolling over just like we're at now. And let's look at this first bear market rally from peak to trough, about 12% on the Dow, right about where we're at now. Let's go back to NASDAQ and let's look at the 2009 bear market in NASDAQ, and the first big rebound there was 23%, very close to what we've seen now in the NASDAQ with this rally right here after this top. Go back again. Here's 2009 and rolled over in the top, had that nice little bear market rally. Let's take a look at the S&P and go back to 2009 on the S&P. And let's take a look at the S&P. Same thing, kind of rolls over into that first bear market rally, which turned out to be 14%. So very similar. Now, here's the interesting thing. Let's start with the S&P and let's take a look at from the last peak to the peak of the bear market rally before it dropped again was about 32 weeks. And let's take a look at where we are right now. From the last peak to this point here, we're right at about 30 weeks. Let's take a look at the Dow. From the last peak to where we are now in the Dow is about 30 weeks. So let's go back to 2009 and guess what we're going to find out? That right there, last peak to the peak of that rally is about 30 weeks. And let's look at S&P. And we'll look at the NASDAQ as well. So the S&P from that last peak to the rally, 32 weeks. And NASDAQ 2009. Let's look at this one here. Last rally to the peak, 30 weeks. So we're looking at pretty much the same thing that happened the last time. We've got this kind of rollover top into these nice bear market rallies at about the 30-week mark. So does that mean that this is exhausted and we're going to roll over for some more downside? We'll have to wait and see, but it's pretty interesting how similar these patterns look. Then let's go back to the 2000-2001 bubble. The Dow was, not quite as defined as the NASDAQ was back during that time frame. Of course, that was a big blow off top with a big drop, but the S&P had a little bit more typical form to what we're looking at now. And let's look at that. So the last peak was right here to the first big bear market rally, 37 weeks. So a lot of consistency in these bear markets, and that was a 21% bear market rally. NASDAQ's kind of, let's take a look at NASDAQ in 2000 and the 2000, 2001, and that was about a 40% rally, I believe. Yeah, that was a 40% rally after the initial drop. That was a significant drop. And of course, that ended up at about 23 weeks to get that over with, much more volatile. Dow Jones is harder to peg back in that time frame in terms of the .com because it was kind of all over the map. But, the last peak, I mean, that had several rallies before it finally rolled over. But let's just take the last rollover here. And that was a big rally. That was about 32% after that last rollover. But the Dow was just a little bit different in that time frame. Now, this looks very consolidated, but this whole time period was about, just to get to the bottom, was 200 weeks. So that was, that was a long time, basically from 2000 to 2003. And then market got back to level in 2006. So it took about 6 years for all of that to play out. Looks like a very quick time frame. But I just think it's really interesting when you go back to 2008 and 9 and look at the situation, how the markets peaked, where they bounced on that first bear market rally before the big capitulation to the downside. Of course, that was a bank failure that created that. Right now, what is our biggest risk in the market? Probably recession, inflation, and Fed not getting ahead of it fast enough to really pivot. Here's something else to really look at too. So when you look at the market here, we had this bear flag with a drop, bear flag with a drop, bear flag with a drop, right? So we'll go ahead and just kind of draw this out a little bit so you can take a look at what that looks like and see how predictable this looks in terms of, the downside potential to that action. And here's something that gets even more interesting. Let's look at it like this. And what does that look like right there? Looks like a continuation, really reversion back to, back to the mean here. So that would be right around 12,500. This is Bitcoin inverted. That would be back to that 12,000 to 14,000 range that we've been targeting. So let's go ahead and take that back. And what does that do for us here? It kind of gives you the breakdown after that to kind of this level right here, and then maybe some consolidation sideways to put in a longer term bottom in that 14.5, 15,000 range, where you get a little bit of confluence here, a little bit of support here. This area right in here in that $14,000 to $15,000 range, and then ultimately the bottom of about 12,200, 12,500 that the price could potentially go to. So not saying that is definitely absolutely going to happen, but it's really interesting when you start looking at traditional markets and how the bear markets of the past have looked pretty much the same in terms of the structure, how they rolled over and then bounced and then went to that final capitulation when the bank failure situation started happening. So that's kind of the fragility of the markets where we're at now. All it's going to take is one little thing to trigger escalation in the war, a deeper recession, more mass layoffs, more companies pulling back, cutting back, inflation not coming down. We know that inflation is probably plateaued. We'll probably see another aggressive inflation print next week from July in the nines, probably either a high 8 or a 9. I kind of think it's going to be a 9.1 again. Could be higher than that, but I think it's going to be at least a 9 for inflation. We haven't really seen anything come down except for gas. So that will trigger markets. So we'll just have to kind of follow things, see how they go. But like I was saying, I fully expect the markets to at least go back down, Bitcoin, and test that low in the 17,000 range to see if we can find support and if the market can ultimately bottom there and then consolidate for the next run when the Fed does actually pivot for real. So these are the things that I'm looking at right now, and I'll see you on the next video.